So ano pag-usapan natin today? We'll talk about my 5-minute pound USD strategy. So let's look at the chart right now and I'm going to point out ano yung mga mahalagang parte ng strategy na to and how you can actually use this on your own trading. So here I have pound USD chart up. I'm also in the 5-minute chart as well. Bakit pound USD ang napili nating currency pair when trading this strategy? Unang-una kasi, mas volatile ng konti ang pound USD compared to other major currency pairs versus, for example, the Euro USD pair. At the same time, mas clean, no? Depende to sa market pero right now mas clean yung pagpiprint ng different structure dito sa chart when it comes to pound USD. Mas malinis siya. Hindi rin siya masyadong noisy. So if we need the price to move to a certain direction, mas kampante ako na ire-respect niya yung mga zones or yung mga levels instead of giving me a lot of noise in the market which might hit my stop loss. So ano yung unang part ng strategy na to? So this strategy is still based on looking for zones and sniper entries. Ano yung zones? Ano yung sniper entries? So zones is basically looking for those consolidations in the market that we can consider as supply and demand zone. Dito sa mga zones makikita mo yung possible imbalance in the market or historically meron ng imbalance dun sa area na to. Ito yung mga consolidation where the price eventually moved higher or lower, preventing the previous direction to move further. So for example, in this case, no, the price was moving lower, but the price started to consolidate, and then afterwards it was pushed up. So there was a resistance in that area, and we would consider that as a demand zone simply because the prices moved right after it. So a demand zone is basically an area where there are more sellers in the market, and because of that, it pushed the price higher. Ang kabaliktaran niyan would be supply zone. Let me just look for an example here. So here we have a consolidation where the price moved lower afterwards. And we consider that as a supply zone because we are going to assume that there are more sellers in that area compared to buyers pushing the price uh, to a lower price level. Okay? Ano naman yung sniper entries? Sniper entries, as I have described in my previous webinars, would be consolidation before and after a supply zone or a demand zone or any kind of peak. Let me give you an example here. So here we have a peak. There's really no consolidation on top here. But for the concept of supply and demand, that is where we are going to plot our supply and demand. However, for sniper entries, when the price has peaked like this without any kind of consolidation, I am more concerned on consolidations that were created before and after the peak was created. So this one here is the consolidation that was before there was a peak, and this is the consolidation where which is after, no, that was created after the peak. So for this kind of structure, I'm more concerned about these two in here, and they function just like any type of supply and demand zone. They are also areas where price might actually pull back or change direction. So for example, here the prices move lower, created this consolidation in here, right? And the price has broken that area. And when it retraced, it actually touched this zone or this level. Same thing for this one. If I'm going to extend it, after the price has broken that area, moved back, has basically tested the same area. Okay? Now, eventually, these areas will be broken between sniper zones and supply and demand zones. I would consider supply and demand zones as still more attractive for the price to actually retest. But in most instances where there's already momentum in the market and the price is just basically retracing, not really a deep retracement, most of the time they are going to pivot on this sniper entries in here. So with this strategy, we are going to look at both areas on the 5-minute chart. And another part that is important for this strategy is direction of the market. And what we are going to use as an indicator of that would be the EMA 144. And the reason we're going to use this is that we don't want to move from one time frame to another anymore, just focus on one chart. Mas madali kasi siyang gawin kaysa yung pabalik-balik, nawawala tayo sa focus. And especially if we are trading the 5-minute, which I would consider as a fast time frame, it might as well just focus on one charts para hindi nawawala yung ating momentum when we are trading. Okay? So how does this strategy work? All right. So once you have the EMA 144 plotted now make sure that you are actually on a trend, a downtrend or an uptrend. This will not work as effective on a ranging environment just like this, right? We do want the price to that is moving lower or moving higher. Okay? Like this. And we do want the price to move away, right? To be far away from the EMA and not touching it at all. Again, this strategy works best if the price is far away from the EMA. This I would consider already as far from the EMA and not close like this. All right, we do want to have our momentum in our side, and that momentum will push the price away from the EMA. So if there's really no momentum or if there's really a possible pivot or change in the direction of the market or even a deep retracement, we don't want to trade those. Okay. And why we don't want to trade those if they are near the EMA is that it will not give us um, a better chance of actually winning the trade by only picking those areas where this strategy might actually work well compared to other areas. Then we are actually increasing our win rate. So how does this work? First and foremost, we also need to know when a trend is already confirmed. And in this strategy, I would normally confirm that if there is already a lower low or a higher high that has been broken by the price. Ano ibig sabihin doon? Let's say here the price is moving down, right? Pero wala pa siyang lower low, major lower low relative to the size of this move. So for example, ito, ang ating first lower low here would be this area, okay? Now, so the price has pulled back a little bit. So basically, you're going to wait for a pullback and you're going to wait for the price to actually break that previous low. This is a confirmation that there is momentum in the market. How do we know that? Because the price has moved down lower, but the market hasn't really verified if there's already momentum in place, if there's already volume and momentum in place to actually sustain that move down, right? And the only time it becomes verified is that if the price tried to move higher but failed to go back to the other side of the EMA. So this kind of pullback or basically failure to pivot the price to a different direction, I would consider that as a verification or a validation that the price is ready to move lower. Okay? So in this case, once we do have those kind of consolidation, it's time to look for possible entries in the market. Now, this strategy is not foolproof. It's not 100% win rate. Of course, there's nothing like that in the market, but it has around 50 to 60% win rate. And considering that the risk reward ratio for this is around 1 to minimum, I think that is already a good win rate overall, and a good risk reward ratio as well. So here we have a pullback here. Prices move higher. Okay. Now those small areas of consolidation, each of those, right, are possible areas for the price to pull back. Okay. So this would be an area. So here I'm looking at here, but since there's a week, I'm going to include the week as well and pull that up a little bit here. Okay. Those areas are actually areas where you can actually trade. So these are sniper areas or zones. If the price has moved lower and wasn't able to touch it and has created a different areas or different consolidation, move your pending order on those areas. So for example, ito bumagsak, umangat, bumagsak, na break naman niya yung low, right? So you can use this as a possible entry to go to the downside. Since this is the 5-minute, I am going to assume that you are going to consider as well the spread of your broker. Kung meron kang kung meron kang broker na ang spread niya is 1 or 2, you also extend your areas or your zone to cover your undent, yung iyong spread. Okay? This is a 10. You can do 20, a 10 here as well. So that is 1:1. Okay? Now that might actually a losing trade kasi after nun umakyat na siya. But that's okay, right? Yung mga ganyan okay lang yan. Pag nag-fail, bumagsak, nag-break, binreak niya yung previous high niya dito, you wait again for another price, for another level break or low. So here, gumawa siya ng low and it was broken here. Price has moved down. This is considered a sniper zone. As you can see, this is the top here and this is a consolidation. So you use that as your entry. The zone has been tapped and you have a risk of around 10. You can do 1:2 here. So that's 20. You would be able to have a profit there. Okay. So this is also considered, this structure here is still considered as uh, a, a structure, a peak, right? So you can use this area as well. This is not a peak, by the way. As you can see, there's a small, these three candles here would be considered as a consolidation. Okay, it was tapped, and that one would be 8. You're risking 8 pips, and you can get as much as 30, 40. But normally I would just do 1:2. So 8 times 2 is around 16, right? So here would be your take profit. So the price is broken again. Your next area would be this area here, your next zone. So this is the top of this structure of this movement down. You might want to use the top here or these three consolidations here. It's up to you. If the price didn't top it and created a different structure, you have to move it. Okay, you don't have to keep those structure in place. So for example, in this case, the price has already created a different structure in this case. So you have to move and cover that structure instead. Now this will fail, as you can see, obviously. It was tapped, price moved higher. Because of that, it's a failed trade and the price has moved higher and broken the previous structure. You wait again for another break of the structure, and the lowest part was here. It was the last low. It hasn't been broken yet, and the price has gone to a higher level already. So this is considered as a change of direction since it has moved and created a higher high on the other side of the EMA. So the process goes back to zero. Balik ka ulit sa simula, no? Hanap ka ulit ng validation na babagsak na ulit siya. So the price has moved lower, created a lower low in here, has broken that lower low, as you can see, okay? So this area here was tapped by the market after the break, moved up, and has moved down quite significantly. Meron pang break na. So you're risking 8 or around 10 kung kasama yung spread, right? Get around 20 at the bottom, and that would be your TP. Here's another example. Prices moved lower and has broken the previous low. And so the top of that would be here. There's also a small consolidation here. You could use the consolidation or the top in this case. I would use the consolidation most of the time. I would rather use consolidation rather than a point, okay? Price has been tapped. You are risking 8, around 10 again, and so get 20 at the very bottom. That is your take profit area. Very easy, right? So that is our strategy for pound USD. It's on the 5 minute. It's a simple strategy. It's not foolproof, but there's a huge win rate for this. And since your risk reward is always twice your risk, you only basically have to win 33% of the time. So around 3 to 4 wins out of 10 trades altogether. So meaning you can lose 6 trades in a row, just make the other wins, and you are still going to break even or even have a very small profit in that matter. But this strategy actually has a win rate 60% and up. So you are all good as long as you can execute this properly and without any errors, mistakes, then you are already gold. So that's it for our 5-minute pound USD strategy. Maraming salamat po and God bless.